Not sure about European openings. I know in Eastern Europe they celebrate Christmas on a different day. So let's just keep in mind what I was talking about, just a quick review of the dollar. We had days and weeks to prepare for the initial drop down here. And then from here, I was saying look for a rally into the Fed. That happened too. And then last week, I said we could back off into this support zone without taking out these lows and give us one more rally, maybe something like this from wherever this low comes in. So this was 97.30. This was about 200 points. So if we bottom before breaking down, 97's a line in the sand. We take out 97. Should see potentially 96 to 94.5 in a hurry. So if there's going to be one more dollar rally, it's got to dig in its heels here between here and 97.50. And if we have equality, say from 97.50, that could take us back up to the 99.5 level again. One more attempt, that would take the euro down to about 107.50 is my best guess. And this would be a dollar selling opportunity in my view, wrong over the Draghi disappointment on QE out of Europe. So we called this drop, we were there for it. This is when I said buy the euro 105, it went to 110 in a day. Then down here I said into the Fed, buy US dollar yen, and US dollar yen smoked for over 250 pips. And then last week we were in here and I said expect a pullback. My preferred count is that we don't just wash out from here. That's possible, but I think the more likely outcome is that we bounce from here without closing under 97. Equality would give us just above these highs, 99.5 or so, and that would set up this being A or 1, A, B, C for A or 1. Then this would be A, B, C for B or 2 up in this range. And then we could look for either equality from 99.5, which is going to take it down. This was about 350. So this would take us down to 96. And if you want to get real aggressive, you would look for a 1.618 target. That would be about 480. So from 9.5, you're talking 5.5, you're talking 450. That's how we could get to 450. So that's my view. Looking for an opportunity if you want to scalp the dollar from the long side. Probably go with the strength in Canada. Crude's down. I think we're going to have another selling opportunity in Canada. Possibly the yen for a reaction. Maybe 100, 150 pip move, but we'll look at those individually in a minute. Last week, though, I did on Monday talk about how the crude was due for a nice rally, and that would create a correction in the Canada, which we did. Didn't quite put in a third drive, but it broke. I think with what's happening in crude today after last week's bounce is going to create another opportunity for a sell in Canada. This is what we have. We had this big rally. That's last year. So I was talking about there were way too many shorts and we had this spike. This happened last week. So it looks like we're starting to give it up again, and perhaps we head down one more time. These prices again showing some premium. But perhaps one more break in the crude oil market sets up a better location at higher levels in USD CAD to fade. Let's go with Fed. Okay, so this was the pop that we had last week. Came back down. Looks like we could get another shot down. And this chart just does not look right to me for some reason, unless they're really pumping in the premium on the deferred. So let me go to daily nearest. Anyway, you'll get the drift that I think now we could have one more flush to set up another chance to short the euro. So here we are. So we had this rally last week. Maybe one more low, clean out these lows. So I believe that's setting up between, I figure late this week, sometime next week, or into the NFP the following week, where we get one more break in crude, clean them out, and then we get this final push up in USD CAD. We'll get to that. Gold hasn't done anything impressive, either as the Aussie. A lot of people still looking for a breakout to the upside in Aussie. I think that's possible, but if I'm right about the dollar, we should have better buying opportunities in Aussie. So maybe Aussie down while Canada tops one more time. So here's your gold market as well. Still could be setting up for some type of push down, one more push down, and that's not going to be too positive for the Aussie. But then next time we get through 12.20 gold, it's going to look pretty good. And finally, the TLT. That's up a little bit today, but I'm still bearish US dollar yen, which should have me constructive on yields. It's hard after a 30-year bull market to feel real strong about it. This could be a failing rally, so the yen on the long side could be a decent counter trend trade to set up a bigger shorting opportunity, just like Canada down the road. If I'm right about the dollar recovering and bonds, bond yields head up, US dollar yen should head up, the dollar should rebound. And that includes the potential of a sell-off in the pound and the euro. Would love to see that dollar rally manifest that I showed on the Dixie chart and have the ability to get in on the long side of euro around the 107.60 level. And finally, the S&Ps. They had a big recovery last week, getting some of it back this week. Not a ton of it. We'll see, still looks like anything can happen. But if I'm right about the dollar selling off to 92, I would expect this continuation to the downside, which should be negative S&Ps. Everyone with me on the outside markets? Feel free to ask me questions so you get it. I correlate the crude oil market with USD CAD, the gold market with Aussie USD, and US dollar yen with treasuries, and risk on, risk off in the S&Ps. Any questions? Okay, so with that, let's get to our currency. We'll start off with the euro. So as you can see here, we are beginning to diverge here in the euro. I'm not saying that we can't still make a move up towards 110, challenge these highs first. But if I'm right about the dollar beginning to dig in its heels, I would expect a pullback in the euro too. Area of interest is going to be 750, 760 on the upside. Shorting areas really not until I get up towards this intersecting point. It has been my objective from down here. I showed the daily when we were down here before Draghi and gave the buy point at 105, 105.50. That eventually we could come all the way back and check the daily breakdown in the euro, which down the road is coming in here at 112.30. But we could also have an ABC, right? Call this an A. High 10, call it 110.60. So call it 250 pips from today's high. We'll give you 107.40 right in here. So this would be the place, should the dollar rally in the next several trading sessions, where I would be looking to get long Look for some reversal patterns to develop, some divergences to develop. But we are getting some here on top. You want to play a counter trend. That's, that's your pick your poison. Could be a decent trade. Pound's still looking weaker. Okay, so EG is the topping mode. But last week I pointed out that we had a confirmed high right here. So we could be going for the 74.30 level again and possibly have a non-confirmation. So this keeps me cautious. This high right here, the confirmed high on the 1 hour, confirmed high on the 4 hour, has me cautious until we make a new high and the RSI fails under 70. So as long as we're in this trend, really the pound's your preferred short and the euro's your preferred long. So looking at the pound, Wednesday I said we could rally back to 150. I showed the 4 hour charts here. 149.70 was the high on that day. 49.40. So we've had a nice little correction after a pretty big break, right? This was a pretty big break. And to me, this looks like new lows are coming. And here's one of the things I teach. After this big break, even though we had a huge recovery, what kind of low is this in the pound? Anyone see any divergence there? You know what? I don't either. Get an RSI reading of 21, so the real simple implicator would imply that there's potential for another low to come, that we're going to take out this low that we posted down here at the 48.05, maybe make a move towards 47. Here's a third drive line right here. 47.5 looks like it's viable in the pound. So during this bout of dollar strength, still looks like the pound will make new lows, and I'll be looking for the euro to make higher lows. So the euro could bottom 250 pips above this low. Completely different picture. While the pound's already taken it out, and the pound can make new lows. Could be a great buy here, because if the dollar's going to head down to 94, we should get a nice recovery in the pound too. But going into the dollar high, the pound looks vulnerable. This looks like it was just a corrective rally. This does not look like the bottom to me, even on the 4 hour. RSI's at 22. It did diverge a little from this low from 20, but still a lot of downside momentum. Maybe the next time down towards 47.5 will start to diverge above the 30 level. So those are targets. It's very possible that we've had this move up in the pound with the dollar weakening, and now if the dollar digs in, the pound could continue its acceleration. Under 48.40, I think you could see stop hunts under 48. Give me a Y if you're with me on the pound. And this is also supporting that, we could still have one more push up in the guppy, and that could be due to relative weakness, or should be due to if the dollar rallies, the pound should end up being weaker. The pound should end up being weaker than the euro. There's a 4 hour pound. There's a 4 hour euro. So this low does not look to be taken out in the euro. Much stronger constructive action in the euro compared to the pound. Everyone with me? The preferred short still the pound. The preferred long is still the euro. At least until the EG begins to diverge and the pound has tested the 47.5 number. Give me a Y if you're with me. Okay, moving on to the yen. Last week I was saying I'd like to see some type of rally to get back into here on the yen. You know, giving you the big picture stuff. Let me zoom in a little bit. Pretty ugly week. I've been saying this up in here. I was saying that the bears had to turn back the yen under 24, because if we got through 24, we're going to go to 29 to 30. Well, I'd say they were pretty successful the last couple of weeks, taking the yen down at the 24 level. So back to 120 from 24. Next stop could be down here, 116. And this is a major, major, major support level. And if you just wanted to be conservative, you know, you could say something like this, call this ABC for A, this is ABC for B, and we're in the C wave. So we should have equality at least, which was from 585, call it 970, from the recent highs of 350, would be about 113.80, 113.80, 114 down here. And then if I want to call this the neckline, or take 1.618 of this, you start getting big objectives. You're talking 108, 109, 110, maybe as deep as this. And this would imply a pretty serious risk off, and most likely a pretty serious dollar decline getting all the way there. But initially, let's look for opportunities if the dollar rallies to where the confluence comes in here around 120, 190. Okay, start laying on some shorts there at 120, 190. And you're wrong over this high at 356. Looking for these lows to be challenged. This low, the flash crash low, eventually to be taken out. So maintaining my bearish stance, hoping the dollar rally I'm calling for generates some type of rally. Let me just freshen up the fibs here. And if you did have your Christmas, I hope I help fill up a Christmas basket full of pips for you, because I think I've been doing a pretty good job. Especially with that big day that we have with Draghi and then the Fed. So I really think the next major market mover is going to be the NFP. So let's just take it down to this wave here. This was a BOJ. Down here, I said buy the falling wedge, look for over 22.5. I was looking for these stops to be taken out. Then we had the BOJ stop, BOJ meeting there. So let's look for some decent levels from here. Let's just assume, you know, I don't know for sure if these are going to be the low before the bounce, or we make new lows by 20, 30 pips, but I could see some action up here. Here's 22 at the 50% level, all the way up to, call it 22.20. So these would be the zone. If I get a nice rally up here, up 22, 22.20, would be an area I'd be interested in looking at. May not have the juice to get there, but I think it always pays to be patient. And I'd wait for at least halfway back to around the 21.85 level. But then again, the big picture is on the daily, this could be a flag, right? Right here. that we're on the verge of breaking down out of here. Give it a little leeway, and then a rally here. And you could end up with something like this. I mean, this was huge. This was into the flash crash in August, but it only took a few weeks for us to do this from 125.20, 900 pips. So if I call this the move, or I really should start from here, that's 25.85 down to here. That's 900. So we start closing under 120-ish. 900 gives you 111. So those are some of the areas that I'd be looking for. The 111 longer term, we'll take it a trip at a time. Initially, we're going to be challenging this low and then this low, and then we'll have a nice breakdown under the flash crash. Only thing that changes the picture is if the yen could recover and recapture the high of the BOJ confusing language meeting that they put on last week. So you guys know I'm not always bearish the yen, because right down here a week ago on Monday said buy it. So now looking for shorting opportunities in US dollar yen. Everyone with me on it? So while we're on the yen, we want to talk about the crosses. It's still my view. I'd rather be short the guppy than the euro yen. Euro yen had a confirmed high, still looks okay to me. So I'm more constructive on this, but I'm still pretty negative on the guppy. I showed this huge formation on the daily that we broke down out of at 180. So any rallies back to now 180, 181, I'd be all over it, because there's big targets to the downside if we're just breaking down here. There's some more at 77, but this is a huge formation. And I'm not late to the party, because I was talking about it with you guys here, and definitely here at 85.20, looking for 81. So big numbers to the downside, maybe 165 eventually in the guppy. So, you know, when you have windfall moves, 500-700 pip moves, you book it. Even sooner than that, in money management, break even, profit stops, and then you look for the next entry. But the picture here is pretty negative. To me, it looks like it's a done deal that will do 174. And if I ever want to make 174 or so this neckline, you know, then you're talking even the 150s. So maybe there are some important moving averages coming in here. Here's the 50-week, 157. And if you look at it, then I should clean this chart up, which I will. Because you know, it's good to have campaign trades. I'll delete everything. So a real bear is going to say this is a failing rally. There's so many bearish things about it. Look at this. Broke down from a trend line right here and retested it right there. Close enough for government work. All right. And we're retesting this breakdown. But this was one heck of a move, right? This is back in September 10th. So just to get a feel of the magnitude, and even a 155 target that comes up on a moving average, my guess is maybe that's just 50% back from this run that we've had. And look at this, 1 drive, 2 drive, 3 drives. So let's take a look at the fibs here. From the lows to the highs. Yeah. Halfway back's around the 55 level, 56 level. So very doable. I mean, look at the break we had here. Look at the break we had here. Look how impulsive this was. This was a huge move. This was a financial crisis. But a lot of pairs have recovered above the financial crisis lows. So this looking pretty heavy to me, guys. So continue to sell rallies in the guppy. Back towards the breakdown. 81-ish, 82, because there are lower numbers coming in my view. The Aussie yen. We got back to the breakdown, back underneath it. It looks kind of heavy to me too, but not as heavy as the guppy, but it still looks heavy to me. We talked about this pivot at the 92 level. I mean the 89.20 level. And then it got to 91 and we're back inside it. I'd wait for rallies. Not as much in a hurry to short euro crosses as the pound crosses. Okay? Euro Aussie, kind of a similar scenario here. We had this nice run from here, right around Draghi, just marking time sideways. To me, this is bullish. You know, all they're doing is trying to work off an extremely overbought condition by moving sideways into a flag. Probably have to buy dips, maybe key off your Euro Aussie buy when you see Euro trading 107.5-ish. And then the Euro CAD was something else that was recommended going into Draghi. I had this line drawn. I'd look for potential pullbacks here. We're starting to get a little three drive action in here, starting to diverge. Okay, here's drive one, here's drive two. Could be something to consider. Comes in probably with a top pick coming in Canada up around the 53.70 level, risking 100 pips or so. And then if Canada does come off and we get that crude rally, we could pull back to 45, which would just be corrective again, kind of like what I showed you on the guppy. Everyone see that? Okay, so let's get to the Canada. So we never had this third drive work out here. Told everyone to wait for the third drive. We didn't have three, we had two and started heading down. Okay, so it was a decent trade. This is what it did when crude popped, as I forecasted it would. Now crude looks to be under some pressure again. Maybe we get a rally, one more rally up towards this 141.20 level. I'd wait for the dollar index to play out around the 99.5 to par level and then see where Canada's at. Right now it looks pretty neutral to me. So it's a stand aside. I'd like to actually see it make one more new high with crude making new high, and this time the 4 hour stay under 70. See? This was confirmed up here. We had a little divergence here, but above my ideal levels of 70. So if we get another push up here in Canada, have some intersecting lines, let's call it 141, which is a couple hundred pips from here. And your RSI on the 4 hour is at or under 70. I take a shot there with a 100 pip stop. And then perhaps next time we finally get this pulled back to 36, 35. Any questions on anything I've covered here today? Basically, the theme is not looking for the dollar to collapse. The preferred scenarios, we get a dollar bounce, possibly into next week, into the new year. It's going to be a failing rally, a C wave. We buying opportunities in euro. Like to see shorting opportunities set up in US dollar yen around that 22 level. Took advantage of the guppy a few times for big pips, 400. Caught the euro on the Draghi bottom in Euro USD, Euro Pound, Euro Aussie, Euro CAD, and now looking for a little bit of a correction there, but longer term to buy into. Still believe that destiny in Euro USD is up around the 112 breakdown on the daily, but would not surprise me if we pulled back towards this 107.40, 107.20 level in here, 107. You got to have your stops under the low. And then if you look for something equality, call this 550. So 550 from 712 would be 1260. There you go, 1260. That's my target. So I want to wish everyone good hunting. I'll be back with you Wednesday. I want to thank you for paying attention. It's my hope I'm helping you accomplish your mission to become better traders, have an eye for inter-market relationships with the outside markets and the pairs that I correlate with it. You're getting the hang about divergences and confirmed highs and lows and three drive formations, and that when you're looking at your charts, you're saying to yourself, I remember Dale talked about this. And if that's occurring, then my mission's accomplished. So I'll see everyone on Wednesday. Good hunting.